how can oil go to 20 cents a barrel? Does it mean that oil has no value or that this futures contract has no buyers?
Well, let's start with the basics, is that WTI is what we call a landlocked crude. It prices 500 miles from any water. As a result, it depends upon pipelines to get the oil in, get the oil out. And you can think about what this demand shock has done. It has created a tsunami of oil that is moving through the global distribution system. To get an idea of how big this tsunami is you take oil demand before the start is running about 100 million barrels per day. It has now dropped down to somewhere around 75 million barrels per day. That's a 25 million barrel per day demand shock. Supply was up here, and as we all know, supply is sticky. It took time, and it's coming down now. But however, what you're left with is this surplus that's moving through the system. And when you think about landlocked crudes, they're joined by all these pipelines. And what happens, the pipelines, it's like driving down a freeway. You hit congestion, and then you come to a stop. That's where we are right now in landlocked pipeline crudes. Pipelines in places like pipeline crudes in places like Wyoming have already been trading at negative prices. Why? Because a producer needs to pay somebody to take that oil away. So when you think about this particular contract, what's happening right now is you cannot store the barrel of oil. And so when you think about the next contracts out, as you pointed out, they trade 27, December is at 33. So you're stuck with a situation where you can no longer arbitrage the spot price to those forward prices because you've filled up storage capacity, the pipelines are full, and you've hit containment issues. And what happens, that value of that oil today can't move, goes to zero.
So let me come back to you and point out that just as you were talking there, that May contract went negative. It is now negative by about more than $1 as I'm looking at it over there now, down at negative 140. What does that mean? Does that mean that producers would pay somebody to take the oil off their hands and store it for them? My backyard's available, Jeff.
You know, then the question is, you're going to use trucking or some other type of mechanism to dispose of that oil. So that oil has no economic value because it cannot be moved to a location where somebody could use it and refine it. So what's having to happen is you have to price it. And the reason why the producer would pay somebody to take that oil away is shutting down a well is extremely expensive. And sometimes you damage the well forever. So they will pay somebody to keep the well running. However, what we're likely to see coming out of this is massive shut-ins at the wellhead all over that West Texas and Gulf Coast region. So this is going to lead to lower oil supplies. However, we don't think this is the end of it. You're likely to see this continue to go on at least through the middle of May.